You there, Matt?
Yes, I
Yay!
am.
Good to see you. You've been here. You've been here. You've been ready. Awesome. So thanks for being here. Let's see. I'm looking at all the names. Hello, hello, everyone. We got Andy and Andrew and Alan. Charles, great to see you. All the Charleses. There's like 6. Christine, good to see you. Cliff, great to have you in here. Glad you're here. I know we talked about this one a little bit already. Deepak, good to see you. Eds, all the Eds and Edwards, great to have you here. Great to see you guys. Emery, good to have you here. Thank you. Danny, great to see you, Danny. All right, Gary, great to see you, Gary and George. Jeff, great to see you. Jim, good to see you again. It's been a minute. Oh, this tells you something. All the Matts, hi all the Matts, and hi all the Michaels. Some last names are new, so good to see you here. The Mikes who are new Mikes. Great to see you. The Mikes who we've been working together for the last few years. Thanks for being back here. Philip and Phyllis, good to see you. Paul, great to see you. Rich, good to see you. Sally, great to see you in here. Thank you. Hey, Ty, good to see you as always. Tammy and Teresa. Terry, great to have you in here. I am looking forward to hearing your thoughts on this one, Terry. You always have great questions, so I'm counting on you, and we do the Q&A at the end to participate. Wayne, you might like this a lot. I know you were trying to get into one of our projects that just filled up, so this one might take its place for you. Isabel, great to see you. All right. Well, everyone, I'm excited. We've got Matt Owens here from OCG Properties. And even though his company is OCG Properties, we're not going to talk about properties at all. So this is a completely new opportunity. So today, what are we going to do? We're going to talk about this opportunity. It's within the SuGo Build Your Own Portfolio Fund, and it's opportunity number 5. So many of you are already in the SuGo Build Your Own Portfolio Fund. For those of you who don't know what that is, you can liken it to a mutual fund where you put money in and then you allocate it to different opportunities that fit your investment goals. So you get 1K1, you sign 1 PPM, it's very simple for you and you can allocate. So we have some people who are already in the first 4 opportunities we've presented this year. They'll likely come into the 5th. And so we really built this fund for our investors who are repeat investors and they come back time and time again. And instead of at the end of the year, you've signed 8 PPMs and 8 K1s. Instead, we built a structure. So you come in once and then you have access to all of our opportunities. So today we're talking about opportunity number 5 with Matt Owens, and I'll introduce Matt and then we'll go through the presentation for this opportunity. And then we'll talk about next steps, how to click into the portal. And by the end of the day, the portal should be live with all the information you need. And then Matt and I will co-host a Q&A session next Tuesday at 1 p.m. Pacific. Don't worry, we're going to give you the links to all that so that you can go into the portal after today and you can review the PPM, all the information you need to. And then if you have questions, after you do your due diligence, we'll come back together Zoom on Tuesday at 1 p.m. And you're going to have your notebooks with all your questions for us, and we'll run through and answer all those for you. We'll make time today for Q&A as well, but we know that this is a blank sheet. You have no idea what you're about to listen to. And you haven't seen the PPM and all that. So we know that you'll have questions after you do your due diligence, and we'll be here for you guys. All right, with that, Matt. Okay, so you guys, you know how I don't like, it's not like someone presents me an opportunity and I look at it for a week and then I present it to you guys. The folks on the team, so Matt's the only one on the screen right now, but we have Catherine Bell in the audience and the team is bigger. And so Catherine and I met, Catherine, I want to say it was like 3 years ago now, at a Laughlin event. It was either 2 or 3 years ago, and then we've been in touch since then. And so she's one of the co-GPs for this opportunity. And then Matt and I knew each other before, and we reconnected again last year. And then Catherine was like, "Hey, Sarah, I'm doing this thing with Matt," and it was like, this Catherine was like the spoke. I mean, the hub, and she connected us all. I was like, "Great! I'm so excited." Because Matt has a really strong track record And I know I'm just like talking and not allowing you to introduce yourself, Matt, but I'll give the stage to you in a minute. Um, yeah, when the private investigator did the background check on Matt, he was like, I don't know about this guy. He's got a lot of properties and a lot of businesses. And I was like, yeah, exactly. Good. That's what I was hoping I was going to find. So, yeah, so I've known this team for a while, and we've been talking specifically about this opportunity. For I think Catherine, maybe you reached out in December. So, we had some real estate deals that we had committed to that we were working on, and so finally those are closed, and we're ready to jump into something new. So, Matt, you're a CPA, you are a real estate investor, you have a debt fund, you have an Airbnb fund, you have like all these things. And so I think that's really cool because for me, I like to invest in what is good right now. I don't have one thing. I used to, and then I got kind of stung. So you have to be a little versatile in the space, especially as the world is changing and you have to
Right.
find the next thing that's the good opportunity. So I really respect that about you. And I'd love to give you the stage now to introduce yourself and a bit about your journey before we start talking about the opportunity.
Yeah, no problem at all. And all these funds, all these things going, all I want to do is spend more time with my kids, which is why I lead the fund structure and, deal structuring, specifically in a specific way. I have a 6-year-old and a 9-year-old about to be 7 and 10, and my son beats me up physically, my daughter beats me up emotionally, so it's lots of fun there, of course. And I started out my career, I'm a CPA, still a CPA. I quit in 2006 when I got my first deal under contract and I was going to quit my job and go into real estate full time, and took some classes, probably didn't realize how hard it actually is to become just jump ship and go into real estate. So I was a real estate genius for about a year and a half before I got punched in the face and lost everything when the real estate crash occurred at that time. And I ended up taking out 200 grand on my credit cards to pay my investors back. And then I took the hit for them, and then they all started reinvesting with me afterwards, and I would build in acquisition fees and be able to, build my flipping portfolio and my holding portfolio. Since then, we've flipped a little bit over 1,000 houses now. We have about
Quite a few,
35
you guys.
million. Yeah, I did the math. If I would have held them, and I've had over $50 million of equity on those houses right now. So
Oh.
the smart thing to hold these things long term, right? You start to realize one strategic move. And that's the whole idea though, is I started in lending, and now we have 35 million lent out in the lending space. We invest in a lot of different operations that we are primarily the GPs on. Mobile home parks, self-storage, multifamily, single family through fourplexes. And I got into the lending space and I started doing tons of these different loans. We've done over $500 million worth of private lending now. We do mobile home park financing. We do, different types of collateral when we're doing lending. And I really love investing in both debt and equity, because the debt side, you get that consistent cash flow coming in, while the equity side, of course, we know we get the tax benefits, the appreciation, the inflation hedges, and all of that kind of stuff with the forced appreciation on real estate. And so that's what kind of led to these kind of lending opportunities, the different strategies that we're going to talk about today, is that piece of it. And so I have a lot of experience doing this stuff, taking my punches in the face along the way, of course. And now I live in Southern California. I went to UC Santa Barbara, got a degree in economics with an emphasis in accounting. We run a nonprofit called For Investors by Investors that teaches financial education and real estate education. And really, I just focus on investment strategies that to try to help people as much as possible now, and focus on the opportunity to be able to add value to, I'll say, the world, as well as make money and do that with for myself and my investors, of course. So it's a lot of
And
fun.
I think your mission is so aligned with the investors who are here. The investors in the SuGo Capital community, they invest for passive income so they can live the life that they want. And if at the same time they're doing good, like they're all about it, right?
Right.
It's definitely a do-good community. It's a really lovely community we have with SuGo Capital, folks who are really about quality of life. So I think you're very aligned in personality, and then also, you guys heard the story of how Matt put himself on the line financially in order to make investors whole. And those are definitely the type of people that I want to be aligned with, right? Because I'm acting on behalf of hundreds and hundreds of you guys, hundreds of investors
Yeah.
are in the SuGo Capital funds. And so we got to have people who are operating in the best interest of the investors. And, Matt having a long-term vision, he's not doing this for 5 years. Like, this is long-term vision. So he wants to create relationships with you and with me for the long term. And so we're completely aligned on that.
And it's, I always teach people, and, when I'm telling people how to raise capital and how to work on deals and bring capital in, specifically let them know that they have to have that major respect for the money. It's not really money, it's hours of people's lives. So do everything possible to protect that money, because otherwise it's hours of people's lives. That's crazy, when you think about it like that. You have to have that level of respect for it and be willing to die on the sword if you can for your investors as much as you can, because it'll permeate into me. That happening to me at that time and then taking the hit just because I was out of fear going, no, I can't let them lose. It turned into probably one of the best things that ever happened to me, other than my wife and kids and that, of course. But, looking at that aspect, what it did for my career in the future, and the word that got out of what I was able to do for people, which, I hope I never have to do it again. But, at the same time, these are the things that you think about long term, about that long term bandwidth of your career as a whole. And that's what I really liked about bringing Catherine on as a partner as well. She has that same mindset of like, I'm not going to go into investment unless it's going to help people as well. And, leave every, person, property in place better than when they found it, is what she says a lot, unless I'm misquoting her, which I could be. But,
It
that's the
sounds
whole
like it sounds
idea.
like the quote I've heard her say.
Yeah, yeah. It's like you have to make sure that, you're doing right by people and you're investing in the
Mhm.
right types of strategies. I don't want to be this venture capitalist bank guy that does this stuff and goes after and preys on people and, in whatever business we're running. That's, you got to have
Yeah.
the right goal in mind for people. It's pretty cool. So,
Very aligned on that. All right, you guys. So before we jump in, I'm going to let you know my due diligence that I did on Matt, Catherine, Deborah, the greater team. We're going to show a slide that shows who the whole team is for this investment. But we spent several months. Our due diligence team went through financials of, so this is the second fund they've done like this. So we went through the financials of the first fund, second fund. We looked at investor balance sheets. We looked at investor statements, quarterly statements, all this kind of stuff. And some of that will be presented in the portal for you guys to see. So, tonight when you go in and you want to start doing your due diligence, some of that information will be there for you guys. We reviewed the all the legal documents. So there's a lot of structures involved in this. It's not as simple as some of the things before, but I did read through all of those operating agreements and PPMs to see who's in charge, who needs to vote to make something happen. So it's Matt, Catherine, and Deborah. I don't think Deborah is on, but Catherine is in the audience. So I did go through all of that. And, in our deal disclosure in the portal, you'll see all the due diligence that we did. And of course, the background check with a private investigator. And the private investigator, like I said, he was surprised because he's like, I don't know, this guy has a lot going on. And I was like, yep, that's what I wanted to verify. Then also he said, and there's this lawsuit. And I was like, ooh, a lawsuit? Because at first I was like, ooh, against Matt? That's not good. And he's like, no, it's Matt against someone else. Because someone else, a contractor ripped him off on this property, this commercial property. And so Matt and I talked about that yesterday. And it's like, yeah, if somebody lowers the profitability of your property, that affects your investors. So you're going to, even though it's not fun to go after someone, he's going after them to make sure everything
con
turns out as best as it can.
contractors are the bane of my existence. I actually
Mhm.
wouldn't have went after him, but about when I put it on the Deals Gone Bad thing on Facebook, about 15 people reached out to me saying he did the same thing to them. So I was like, I gotta go and
You got to
get this
stop
guy
them if
back.
you
Yeah,
can.
stop him if I can. Yeah, exactly.
Yeah. Yeah. All right, you guys, you ready? Are you guys ready? Please use the chat, use the Q&A. Oops, I only have the chat on host and panelists. There you go. All right, the chat has changed to everyone. So you guys can chat, ask us questions. We'll try to peek in on them, but definitely at the end, we'll stay on and answer questions. Hi, everyone who said hi, and I wasn't looking before. Be great to have you. Okay, so we're going to jump in. Let me go ahead and share my screen, and we'll get rocking. And again, Catherine is in the audience. Catherine, I just I think it's simpler to have two people on the screen. But if you see questions in the chat and you want to answer, feel free to. Catherine is one of the other co-GPs in the debt validation fund. So if you see Catherine Bell answering anything, she is qualified to answer those questions. All right, awesome. So debt validation fund. This is for accredited investors only through the SuGo Capital Build Your Own Portfolio Fund. And we're going to talk about invalidating debt, but this is called the Debt Validation Fund. So before we get into the details, Matt, like in a sentence or two, like what is this fund and what is debt validation?
No problem at all. I totally understand the confusion. What we're actually doing is we are lending money secured against contracts receivables that we're at 25% of the value of those receivables is really all we're actually doing here is being a lender, lending money to a company that owns receivables. And what these receivables are has to do with the debt invalidation business. Okay. And what debt invalidation is you have a borrower or I'll say a consumer that is in trouble with credit card debt, has been sold to collection companies, and collection companies buy this debt for pennies on the dollar. Maybe it's 2 cents, and they hope to collect an average of 5 cents on the dollar on these, collectible receivables or the credit card debt. And their options in that case are they can go bankrupt. Usually they can't afford the monthly giant payment that they got to make with super high interest. Maybe they have a $40,000 balance with $1,000 minimum and 30% interest, and they can't afford that payment. And so they can either go bankrupt and it stays on their credit for a super long time, do a haircut on that debt with those creditors, which also stays on their credit for a really long time, or they can go through and have it basically a big consolidation loan, which usually they can't afford that. But the fourth option is debt invalidation, where the attorneys come in and they try to validate the debt, and they say, "Hey, prove to us creditors that you owe this, that this debt is owed to you." And a very big chunk of them do not have the ability to show that. And by doing that, they're able to wipe out a big chunk of the debt. And then they find out all the ways the creditors are not abiding by the Fair Credit Practices Act and other, credit consumer protection laws. And the attorneys then will go out and sue those creditors and wipe out those debts as well through that process and get those debts, I'll call it invalidated. They're validating the debt first, and then they're utilizing the legal process to be able to wipe out the remaining debts of that client. And in doing so, they say, hey, there's going to be some legal fees and some services that have to be provided for this. So instead of $40,000 in debt with $1,000 minimums and 30% interest, we're going to put you on a $6,000 legal fee receivable, fully paid off with no interest, with an average of a $250 payment, and get you out of debt in 24 months by doing our services for you and wipe out all these debts. So that's the process involved. I know it's long-winded, but it's really
Well, it's
cool.
not 1 to 2 minutes.
Yeah, I know. I'm sorry. It's
Not
it's
one to
really
two
cool
sentences.
though to wipe this stuff off these people's books and put
Yeah.
them in a much better financial spot where their credit is saved. All those debts are wiped off. It actually helps their credit because they're getting rid of all this debt that's on their books legally through the legal process.
Yeah.
So,
I love it. And if you guys see Debt Validation Fund 2, this is not the first time Matt and his team have done this. And so I really like that. They had a fund, it was smaller, they tested it, it was their pilot, it went well. So they opened this second fund. So legal disclaimer, even though we're going to talk about, Matt's first fund went well, this second fund is going well. I've reviewed financials, etc., but it doesn't guarantee that in the future it's going to go well. And so as with any investment, there is the risk of principal loss, calling that out in the legal disclaimer. And then I'm going to say, these are, I think, the top 3 reasons you should stay until the end and hear this full hour presentation, because a lot of you want shorter term holds. Like if I present you a real estate and you say, hey, and I say it's a 10-year hold, you're like, nah, do you have anything shorter? So this is a 3-year hold, super attractive. A lot, like 50% of our investors are using their IRAs to invest. So this is not leveraged real estate, so there's no UBIT. So for all of you who have been saying, hey, do you have anything that doesn't have UBIT? This doesn't have UBIT. And this is a cash flow, so great for those of you who are looking for passive income. Maybe you're a TARDIS client, you're looking for something for your snowball. This is a cash flow investment. It's paid out quarterly. It's 5% cash flow each quarter. That's really simple math. You put in 100, you get $5,000 a quarter. So now we'll get into that. That's the high level, but we're going to get into what it is actually. How does that money happen? And Matt, I'd love if you went through this slide for us.
No problem at all. So we're doing a 3-year term, 36 months, interest only term, and investors get paid 20% on their funds paid out on a quarterly basis. We're not using any leverage at all, so we are secured in first position against these giant pools of receivables. And we're talking about thousands of receivables here. So on like a $5 million capital raise or investment, we're secured against $20 million worth of receivables that have an average 80% collection ratio, or $16 million of total receivables being collected. And that's diversified across like 3,300 receivables at these smaller balance $6,000 average receivable balances. So it's really interesting to be able to invest in something like this in a short term, high interest, and high collateral type situation.
Anything else you want to say on this slide?
That's good. This is great. Yeah.
Okay. All right. So as you know, investors, the team is the most important thing. So Matt's company is a larger team, but as far as who is in the management and leadership of this fund, we're just going to kind of highlight those people. Matt, if you want to kind of introduce Catherine, Catherine's in the audience. Catherine, if you want to say hi in the chat, everyone could say hi to Catherine. She's here. But yeah, any highlights you want to give on Catherine?
Yeah, Catherine is, just an all-around amazing person. I really love her goals of being able to help people in all of her investments. She loves being able to, I say, she says to herself, rent dirt and be the bank, and invest in those types of asset classes. She has a significant experience doing that. She actually came from the foster system and has a goal of being able to help all these different foster kids get adopted, and really significantly involved in that space, trying to help people in that way. It's been great to work with her, on this investment, and she brings a ton of resources to the table and a ton of knowledge to the table across the board, and significant experience in both debt and real estate as well, like myself.
Awesome. Here's some more members of the team. So
And
Rick, is Rick your brother-in-law?
no, Rick is one of my partners, or one of my chief operating officers as well.
Oh, okay.
He's been
Another,
with me for 13 plus years. I have a very, maybe a 10-person plus team right now that have all been with me for 10 plus years. And we've been doing all types of deals together. Rick actually brought a lot of investors from Japan and China for us. He actually handled my entire lending business as well, and all the systems. He's very much an engineer mindset and tech mindset type person. Handles a lot of my investment calls with my investors, that understands all the intricacies of the investments we do and how to do the right planning for other investors. So wealth of knowledge there. And Justin, he's a military vet, worked with us as an investor liaison and investment manager with OCG. Has a great experience in real estate as well. And then Deborah is a CFO, has CFO roles, and as an accounting background with us as well in the business. So it's been great to have a good team in place to be able to add different skill sets to the table. So
yeah, and working with your team over the last 6 months, I've been really impressed with everyone. They are a great team you have.
awesome.
All right, so key points. Matt kind of mentioned most of this, but I'll highlight it again. So it's a 36-month investment, but with an asterisk. So the borrower does have the right to pay it off early. So likelihood of that happening, who knows? But it is a 36-month term. I do see questions in the chat. So what happens at the end of 36 months? Do we get a balloon on the back end? And you get your principal returned at the end of 36 months. And so the minimum investment, if you are new to the SuGo Build Your Own portfolio, fund, then the fund minimum is 100K. So you'll need to come in at the 100K. But if you're already in there, like we have lots of investors in here who have been in the fund since the beginning, you've already been in the first four, you can top up and add 50K. That would be the minimum for those who are already existing investors in the fund. And again, it's 20% annualized returns paid quarterly. And it's not starting in quarter one, it's starting, the first payment will be the end of the first full quarter. So like if you invest today, we're mid-quarter. So you would get your first distribution at the end of Q3, so October 30th. And then we'll talk about more how that works exactly. However, your interest starts accruing right away. So even though the payment doesn't come till later, if you wire your money today, we're going to have a rolling close every Thursday. So as long as your money is in weekly by every Thursday, on Friday, the money goes to Matt's team. They deploy it, and within 10 days, you're starting to earn your interest. So that is super fast, you guys. Within 10 days, of you wire it to us on a Thursday, it starts working. And so the first payout will be to you the first full quarter after you have invested. And it's easy. It's 5% per quarter. Anything else you want to say on this one, Matt?
No, that was perfect. I wanted
Okay.
to hit the proration. You got it on the money.
Okay, great. And I do want to say, I don't remember if we have it somewhere later, but I don't think we addressed it yet. And this is a question I got a lot when I was already talking to some investors about this is, well, isn't it risky if people are not paying, like if they're already not in debt and they're not paying their credit cards off, like seems like a risky bunch. However, the money doesn't go out in order to, support these loans except for folks who have already paid two distributions, so they're on their third. And sorry, not distributions, but payments. You want to explain that part? Because I think it's super key. And probably a lot of people are like, yeah, it seems like a risky bunch. But how do you
I,
make it a lower risk
I I
situation?
totally understand. And once you understand, I'll say the incentives, it really changes things. And the first thing is that if they stop making payments, then the invalidation services stop and the legal services stop. So they don't get what they are, their goal of, invalidating their debt. It
Yeah.
takes a period of time to work through the legal process for these attorneys to do that work, of course, right? So
Hmm.
they have a major incentive there to actually collect. Now they're also taking them from $1,000 minimums with 30% interest down to an average of a $250 payment with no interest and, fully paid off in that period of time in the 24-month period. And so that incentive alone puts them in a much better financial spot. In addition to that, part of the due diligence process before signing up a client is they go through and look at every single account to see which ones that they know they can invalidate up front, as well as, dispute via the legal process. And then they also look at their debt to income ratio and what they can qualify for to make sure they can make that payment. And then if they don't make at least two payments on that account, then our funds as our investors don't get collateralized against that account. We only take collateral where that client has made at least two payments on that account to start the process on the contract. So they're signing the contract, starting to make payments after they do the analysis, and then we have to wait two payments and then we collateralize at that point. So it really dials down the deficiency ratio. And what's great is that, we have an average historic collection ratio of 80%. Actually, right now we're seeing 85%, but we, put everything at 80 to be conservative. And with that ratio right there, if you're looking at an 80% collection ratio on thousands of contracts, that's what gives you your protection as far as the collectability of those assets, seeing this 80% collection ratio continually occur.
Thank you for that. And then I was just while you were talking, I was looking at the Q&A. So before we go further, I want to just touch on some things because I see some things some people are nervous about. Some people said, does this have any connection to the debt validation fund with Dave Zook?
Yes, so this goes back to the history that I have with Resolution Processing, which is the company that we are lending money to.
Okay.
The way I first met Resolution Processing was through a good friend of mine named Jeremy Roll. It's a super experienced
Mhm.
investor himself, and has known him for over 10 years. And I started learning about debt resolution about 3 years ago, or debt validation about 3 years ago, and I saw what was occurring was there was a lawsuit going on where David Zook and a bunch of other high-profile investors, including Russ on my team that runs resolution processing, was raising capital for this type of business. And one of the attorneys, this guy was going through and starting collecting all the money and doing the legal work with his law firm for all of these contracts. Now,
Mm.
that attorney went through and decided to say, hey, I'm just going to start keeping the payments and I'm not going to revert that back to investors. And so now that's stopped. We have an outside servicing company doing that. But in that meantime, I was watching this whole thing happen and waiting to invest my money to before so I could see what occurred.
So to be
And
clear, this was not your fund. Just for those
this was
listening, to be clear, this is not Matt's fund. He's talking about
no.
someone else's situation. Yeah.
Right. So this is Zook, along with a bunch of other, operators out there, including Russ, that was raising the funds and deploying them into these types of contracts, and the attorney started keeping the money. And so then all the investors, including Russ and Zook and everybody else, went and sued this attorney. The attorney tried to go bankrupt, and the bankruptcy attorney saw what he was doing and said, "No, we're taking complete receivership over of your law firm." And in the meantime, all of the investors and the bankruptcy attorney decided to have Russ, that I work with resolution processing, help take over all the operations of those contracts because they trusted Russ to do that and saw his operational
Yeah.
capabilities to be able to do that. In the meantime, they're working through those contracts, and all the funds are going back to the bankruptcy estate to help pay the investors back and things like that. And then at the end of the day, they all actually went through and helped Russ to buy those contracts out of the bankruptcy estate to get a big chunk of money back for investors in this case, and go back into the bankruptcy estate there, including a split for those investors long term on all those contracts. So when I saw all the other investors go and that were involved in this, utilize Russ's operations and do that, that's when I started really paying attention and seeing what was happening. And they had a court approved monitor that was monitoring his activities and operations. And I saw that happen. I got all the legal backup and the documentation and did background checks on everybody involved and met the whole team involved before I personally invested 250,000 of my own capital first to test the system, deal with the communication, make sure I knew the system and knew the operators first before I decided to do my debt fund one, which I raised 2.5 million first, made sure all that could get implemented, and I saw the contract, saw the data, and then did debt fund and did the second tranche of that for another $2.5 million for debt fund one, and saw the performance of that before I started doing debt fund two. And during that meantime, what I'm doing also is I'm reviewing a sampling of these contracts consistently, tracing them to the bank accounts, seeing the funds coming into the accounts as well on a monthly basis, reviewing all the contracts, ones that have fallen off, new ones. And I do that every single quarter because I want to make sure that, everything is still running smoothly. We're seeing all the contracts. Right now, we're seeing an 85% collection ratio, like I mentioned. We're still above. He's keeping us at the 25% cost to value ratios on our contract values. They have over $69 million worth of contract value now, which is really, really cool. So, but after seeing that case occur, and now this attorney's under investigation, he's also going to jail, and they're waiting until that they get as much capital back from the investors before they prosecute on the legal side for that attorney. But you guys can feel free to talk to Zook about it, or anybody else about the case. And we also have the backups of the court documents and all that stuff, so that you guys understand that piece. I took a lot of time because
Yeah.
something like that you got to make sure, and I wasn't
Yep.
going to do it until I put my money in first, so, and saw the
Yep.
process out, because all I care about is my investors' capital. You can make money, but you can't if people, if you don't do your homework right. So that's all.
Exactly. So I hope that answers a lot of the questions like, okay, how are these operators better than others? So to summarize, there was something that went wrong. The court appointed Russ to make things right. Russ, you'll see when we go to the org chart, is now the head of resolution processing,
Correct.
who is the one who's like, we're all giving them money and they're actually making the money and giving it back to us.
Right. And we're secured by their receivables with UCC
Hmm.
filing. So if something was to happen with them, we can legally take over those receivables and take them to a new servicing company and take those over and keep having those attorneys do their legal work associated with it.
Cool. All right. Excellent. Okay, so I'm going to go back and share. I see some other questions, and I think we'll answer most of them in the rest of the presentation. But I was seeing those questions, and I wanted to get to them before we moved on. And so that's really great. You know, the risk mitigation, we're all selected by the court, starting at the third payment, and then the 85% collection rate makes this a really strong, lowers the risk of this, good risk mitigation. I think we talked a lot about this, but is there anything you want to pull out of here that you haven't touched on, Matt?
Yeah, I think we touched on this, like I mentioned, the debt resolution and debt invalidation process already in the very beginning. So, it's a set process they go through. We talked about the average cost of our funds secured against the receivable is 1,500 on a $6,000 average receivable, multiplied by thousands of contracts, of course, to diversify our portfolio. I find when you're investing in pools of debt, it's much safer across the board when you know your percentages across, even if there's a major change in the market, you can still measure your change there and be able to have that big pool really helps you so that you're not in one asset specifically.
Yeah, love it. And that kind of goes, Terry, I knew you would have some good questions. He said, how diversified is the fund in terms of how many contracts is every $1 million spread over?
So 5 million is 3,333 contracts is what that is. So
Okay,
divided by five.
divided by five.
So that's 667 contracts for every every $1 million.
Okay, cool. Thank you for the question, Terry. I knew you'd have a good one. I knew you'd have a good one.
There's some other good ones too. We'll head them up at the end for sure.
Yeah, definitely. Okay, so I said in the beginning, this is a little bit more complex than some of the other offerings. It's not like, well, there's one entity and it holds an apartment building and that's where the money is going. Um, and I'll let Matt describe this and
No
and
worries.
and know that because some people are asking questions about different pieces. So Resolution Partners, uh, you know, okay, so I'll do the first part. You see down at the bottom. SuGo BYOP. So that's us. SuGo Build Your Own Portfolio. So that's the investment entity that you would go into as an investor. And then we send the money to the larger fund, OCG Debt Validation Fund. And I see people asking how big is the fund? So OCG Debt Validation Fund is 50 million. So there's about 20 million left. Last we spoke, I believe. So I would love for everyone, if you are interested, go into the investor portal and put in your soft reserve because then I'll know I want to take all the rest of it for SuGo Capital investors. But I want to see your soft commits because then I can go to Matt and say, can I have the rest of the allocation for the SuGo community? Or if there's not as much interest, at least I can let Matt know, oh, we're not going to do the full rest of the 20 million. Either way, it can work out. But if we do have enough interest, I want to make sure and say, Matt, can you save it all for SuGo? Because we got a lot of interest. So if you guys go to sugocapital.com/build, Kath, if you can put that in the chat, that's the portal. You go in, you find opportunity number 5, and you put it in soft reserve. It's not binding. You'll see all the information later, but I want to explain that piece. So then the larger fund, the OCG Debt Validation Fund, that's Matt and Catherine and Deborah's fund. Then they send the money to Resolution Partners, and they're the ones who actually make everything work, and they're working with the clients and the marketing partners and the attorneys. And really the hub. So Matt, can you explain, because I also saw some people saying for the client, how does Resolution Partners pick the clients, in order to lower the risk for investors and that sort of thing. So
Absolutely.
I'll step away and let you say whatever else you want about this slide.
No problem. So what we're doing is we're investing our funds into Resolution Partners as a loan to Resolution Partners secured against these receivable contracts as a loan. And what their Partners is doing is every single week they have marketing partners that they utilize that are consistently doing pay-by-click marketing, direct mail marketing, and consistent, outreach to find clients that fit the description that have been sold to creditors that might fit the right description, and that maybe have $20,000, $40,000 in credit card debt that they can go through and invalidate it, all the way up to hundreds of thousands of dollars with the debt, depending on the situation. And what they do is for on average, they first the marketing partner sends the client over to Resolution Partners. Resolution Partners then goes and does a deep dive due diligence on that client, analyzing their debt to income ratios, analyzing all their different credit card balances, the monthly payments, what communication has occurred between them to see if they are abiding by the Fair Credit Practices Act. They're going through and seeing if they are legally able to collect this debt and have all the right paperwork involved in that process, and choosing which ones they know they can invalidate and which ones they can't. There's companies like Discover Card or credit unions or certain creditors that don't sell their their bad debt off to collection companies. And so when that occurs, there's not really as much of a way to invalidate it unless they are not abiding by their collection practices or those laws there on the back end. They usually have the legal documentation for this. And so there's a lot of due diligence that gets done at that contract level, that customer level, before they accept them as a client. And once they accept them as a client, they sign a contract for these $250 a month in processing and another $50 a month in legal services. And they go through and sign this contract and they start making payments. After they've made at least 2 payments on that account, then that's when we go and we start to secure our UCC filings. We're usually doing the UCCs on a quarterly basis, or as every quarter occurs, we're getting those UCCs updated for the new acquisitions that are occurring. And we have a promissory note that's a revolving, like a line of credit to Resolution, secured against these specific receivables each time. And the attorney goes and immediately sends out cease and desist letters to those creditors as soon as they sign up as clients, and starts their process in invalidating that debt as they make those specific payments. So that's the process here. And what's super awesome is that we've set up a system because, like I mentioned, we want to go through and help people as best we can. And so we set up a system for first responders, for active duty military, for military vets, police, and firefighters. And we're trying to add some more people to the mix as well and get approval for, teachers and things like that as well. But we wanted to start with first responders, and we're able to help them invalidate their debt and get massive discounts on their debt invalidation. If there is police, firefighters, or military that are in debt, they can utilize our QR codes and they can get massive discounts. And we did this negotiation with them to try to add goodwill to the community, to be able to make sure that we could get and focus on first responders. My dad was a ranger and a sniper in Vietnam. I have a big military relationship base with a lot of friends of mine that are Marines from Camp Pendleton, where we've trained Marines, consistently on real estate strategies on how to help them create financial freedom in their life. So this fits perfectly into helping them first put them in the right position to be able to start creating freedom in their life through the right strategies, the right financial education. And I have a financial education course that I'm right now starting to build out to put behind this for these consumers that get to help once they're in the process of getting out of debt, to teach them the right financial education strategies to keep them out of debt. It's not set up yet, but I'm in the process of developing it now to try to do that and add that additional goodwill to the mix, because it's about educating people on the right financial strategies. You realize that 90% of the population out there has trouble with financial budgeting and personal finance. It's not something that's taught in school. I've seen doctors and, people that high level degrees that don't have that knowledge base because they get taught their specific, profession, but not how to invest and keep their money. So I have a really big passion for this because I think it's lacking massively across the board in our population as a whole. So
Yeah,
sorry to go
I think
off.
that's I think that's really great. I think that's really great. And one of the things I really, that sparked my interest when I first heard about it, when I spoke to Catherine, back
Right.
last year, I was like, ooh, that's really awesome.
That's why she got involved in this in the first place, is the
Mm-hmm.
goodwill for everybody else. It's pretty cool.
Yes. Mm-hmm. All right. Any other questions on this slide before we move forward? I saw some people say, this is a webinar I'll have to listen to again. This is recorded. Just let me double check. Yep, it's being recorded. And it will be in the investor portal, so you can watch it. You can back up and rewatch any section you want as many times as you want. All right. Overview of the fund. I think we covered everything already. I do want to highlight on this point, since some other people asked after we mentioned it, the overall fund size. So the debt validation fund to Matt's fund, the overall fund size is 50 million. And there's about 20 million left. And so I saw some people asking about that and also asking what is the risk of this fund. And so I want to tie those two together because I like doing this with folks I'm going to invest in. I say, oh, you've got 20 million left. Would you like me to write a check for 20 million next week? Or would you rather I give you $3 to $4 million a month for, the next several months? And someone who says, I want $20 million next week, it's like, ooh, it's hard to scale like that. But if you get money over time, then you can scale according to the money that you're receiving. So I really liked that when I asked that question to Russ, he said, I'd really like a few million every month in order to get to the end of this. I said, great. So if you're interested, I saw some people saying they're interested, but when does the fund close? I don't have the money now. I might have the money in 2 months or 3 months. So know that this is going to be open on the portal until that 20 million is full. And so it's a rolling open, meaning every week whatever we've collected from investors, we'll send it over to start working with the fund, and it'll start earning interest 10 days later. So whatever, if you're interested, put in your soft reserve. And then every Thursday, we'll just see who's wired. We'll collect it and we'll get that money working. So it's not going to sit there, like a real estate, it could sit there for several weeks, maybe even a month in some cases, right? And so this one, it doesn't sit there. It's rolling open until it's full, but please do put in your soft reserve. And Kath, if you would put that again, sugocapital.com/build is the investor portal for build your own portfolio. Select opportunity number 5 and put in your soft reserve. It's non-binding, but it'll let us know, okay, how much is of this allocation of the 20 million left do we want to reserve for SuGo Capital investors? We mentioned already it's a 20% cash on cash, so that's 5% paid quarterly. And then a lot of people were asking too, I saw, okay, so when you exit, like say that it's only an 80% collection rate, then do you get only 80% of your capital returned? And Matt, correct me if I'm wrong, but no, that's all taken into account. The original contribution amount is what's returned at the exit, correct?
Yeah, correct. And we have a slide, I think, that covers this, so you'll see and understand what the collection is, because you're talking on a $5 million raise with $20 million worth of receivables that is 16 million collectible at an 80% collection ratio on $5 million that's raised. So you have almost triple the profits comparatively to the capital invested. So you're there. That's why they're able to pay us a higher interest rate on this, is because they're making so much money on the back end after paying the interest on these notes.
Mm-hmm. Yeah. Thank you for that. So that creates a situation where there's really, 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 really low chance that the full principal would not be returned at the end of the contract. No management fees and upfront costs to investors. I also saw someone was asking, what are the fees and upfront? Nope, you'll get 20% cash on cash, and that's that. No fees on top of that. Minimum investment. So I'll repeat this. If you're new to the SuGo Build Your Own Portfolio Fund, it'll be $100,000 minimum. If you're already in there, you've already put in several $100,000 in the other projects, you can just top up at another 50K if that's what you want. But of course, you can do 100K as well, whatever you'd like. And then I did see someone ask this. So primary markets nationwide. Someone was asking in the chat or in the Q&A, geographically, where are most of the contracts? That's an interesting question. Oh yeah, that was from Kelly.
They're all across the country, and they
Okay.
have attorney representation in all the different states that they do this in. So that's how they do it. So it just depends on where the actual consumer is specifically. And of course, there's different laws in each state for consumer protection laws as well. They get overlaid on top of the federal laws, and so they have attorneys that they get help with in these different states. But it is nationwide. There's a couple of states that they're not doing business in specifically because of user laws. I think one's New York, but don't hold me to it. I can't remember a couple of the states that they're not doing it in.
Okay, awesome. And then I'm going to stay on this slide. I'm looking at questions in the Q&A and chat on this slide. I want to make sure it's really clear for you guys. Um, so, and these are great questions from Cliff. So he said, okay, so the funds are at resolution. What's the protection of capital from OCH? I think you mean OCG and SuGo. Cliff, I don't quite get that, but does that question make sense to you, Matt?
Yeah, absolutely. So what's
Okay, good.
happening is that investors are investing into SuGo capital, which is buying shares of the OCG Debt Validation Fund.
Yeah,
OCG Debt Validation Fund owns a promissory note that is lent to resolution processing, and our collateral, it's like we're lenders, our
yeah,
collateral is the all these contracts. And so
yeah,
that's how it's working. And if something was to happen with the resolution processing, we can take over those contracts. It's like if we're being a hard money lender on a house, right?
yeah.
Or a private lender on a house, you could take over the house. It's the same thing in this kind of situation. And so if you are technically investors into the OCG Debt Validation Fund via SuGo, and so by doing that, you have direct ownership in the promissory note that is secured by those receivables. I
Thank
hope
you
that
for
helps.
that.
Yeah.
I didn't understand that that was Cliff's question, but great.
I thought it was, but maybe I'm wrong.
Yeah, Cliff, let us know if that was what you were asking and if that clarifies things for you. Another thing that's not on this slide is how can you invest? So you can invest with your IRA, with your 401k, with your trust, any entity really, your LLC, C Corp, partnership, any of those. And some folks are asking, great, so there's no UBIT? Correct. So if you invest with your self-directed IRA, there is no UBIT. This is not a leveraged investment, so no UBIT. But do know if you use your IRA or your 401k, the 20% cash on cash goes back into your IRA or 401k. It does not go in your pocket. You don't want to do that. So yes, it will go, the 5% paid quarterly goes back into the account of your IRA or your 401k.
And let me clarify something on the tax side that I think is
Yeah,
actually really, really cool about this. That
yes.
my CPA, and you want to get advice from your CPA as well, of course. I'm a CPA, but I hire really like specialists in the IRA space and things like that. And what we've structured this as is normally interest income when you invest individually, not inside your IRA, but interest income is considered portfolio income, right? We're lending money, so we're collecting interest. And so it's considered portfolio income. And normally you wouldn't be able to take your big cost segregation deductions from buying multifamily or mobile homes or other assets against interest income because it's not passive income. However, because we are in the business of lending money here, we are classifying this as ordinary income, which makes it passive ordinary income for our investors, which now you can take cost segregation study income against. In addition to that, so that's amazing because now you can wipe out all of this taxable income by investing in this fund if you invested in properties too and have tax loss carryovers or tax losses in the same year, even maybe for some of the deals you just closed on, of course, on cost segs. But what's interesting about this too is because it's still classified as technically interest income, even though on the K1 it's ordinary, you don't have the UBIT attached to it that you normally would for an IRA investor. So you get the best of both worlds where you're not getting taxed as UBIT in the IRA, but you get to treat it as ordinary income when it comes to the deductions of making it passive on that side, which was really, really cool. And so verify that with your CPA if you want to. I've gotten the backup information from mine. We can provide that stuff to you as well, but get your own tax advice. But that's how we're classifying it. And it's pretty awesome to be able to get the best of both worlds there.
Yeah, I love it. Questions on the 50 million and the first 30 raised. When did the fund open originally? When it's
The
I,
fund opened in September 2024. So, and before that, we did debt fund one, and then I invested my own personal capital a few times as well.
yeah, perfect. So, excuse me, Jatindra, I hope that answers your question. And the payment history, we have that will be in the portal. Some of I did review the ledgers with Matt for the quarterly payments, and then an example of one will be in the portal as well. So, Matt, Q1 went out, and what percent went out to investors for Q1?
Yeah, the full 20% went out to investors. We actually coordinated with Resolution Processing to try to get the funds earlier in the month so that we could even make the payment before the end of the quarter ended, which is, I feel like this is, even though this is equity, we treat it like a mortgage in our mind that it's due by the first as best we can. If there's some delays in our accounting or something, don't kill us if it's the next week or something like that. But we try to get it out, immediately right after the end of the quarter, right before the end of the quarter if possible. It's my
Mhm.
CPA brain saying, no, get it done.
Yeah, I love it. I love it. Yeah, a lot of our other stuff, I'm like, it'll be paid out 45 days after end of quarter. Because if you have 5 pieces of real estate, you need to get all from there, and then this will be quick and easy, you guys, in
Right.
comparison. And then Philip, you're asking what kind of tax document do we get? And you get a K1 for this. It will be one K1 um, for the SuGo Build Your Own Portfolio, and so that'll be one of your investments within it. Hope that answers that. I think we hit on most all of this, Matt. Are there any bullets that we didn't hit on? Because I know we're getting near the top of are we at the top of the hour?
Yeah, I mean, really, we haven't. Just the last two lines of this to show you, hey, on a $5 million investment at 1,500 cost, that's that
Yeah.
3,300 contracts times $250 payments is 833 a month. And if you do the math on that same $5 million of investments, there's a big spread there in what they're collecting. And so, what's really cool on that $5 million, you're looking at a 20% interest rate divided by 12 months, you're looking at $83,000 a month versus collectability of $833,000 a month on those receivables. And what they're doing is they're buying more receivables with that spread, which snowballs into more and more collateral involved for us, and at the same time enables them to keep us at that 25% cost to value ratio, which is awesome, even as they collect payments on the contracts.
And I see some questions that are related to this from the past that I'll bring on. So,
Yeah.
Katon, great question. He said, "What's the lowest break-even point of collections that you can collect in order to still receive the 5% quarterly and the 100% return of capital at the exit?" I don't know if you know the answer, but I mean, this shows that it would have to be a pretty low collection rate.
Yeah, so if you're looking at, 120%, for example, that you have to, you're looking at $1 million, total on,
Mhm.
on an annual basis here, that you have to actually collect. And, on $1 million, if we're dividing that by 12 months, that's like 83 a month, and that we have to hit. And so if you look at the $833,000 a month of actual payments that, are coming in, it would have to be significantly lower, like a 10% ratio to not hit that number, of course. Now we still have to pay back principal with that piece as well. So if you're looking at $6 million and trying to pay back all of those funds divided by 12 months, you're looking at $500,000 to pay it all back in 12 months. But you're talking about usually 24 months. So it's really $2.5 million a year plus another $1 million in overhead, divided by 12 months. So you'd have to collect about 291,000 out of 833 in order to, break even, which you'd have, the minimum would be like a 35% collection ratio instead of an 80% collection ratio. So we'd have a significant drop in contracts, which is very hard to do when you're diversified across thousands of these contracts like that, and to have this historical data that's showing the 80% plus collection ratios.
I hope you all enjoyed that math that Matt just
Sorry.
did on the spot. That was amazing.
I'm sorry.
I was like, I'm gonna
It's
make my calculator out. Oh, he already did the math. Okay.
I love the math on this stuff. So it's my
So, yeah,
my
and I think that's a great question, Kaiton. Thank you for asking it because we ask that a lot in real estate. Like, what is the occupancy rate to break even, and those kind of questions. So it's really relevant. So in summary of all that, the answer is a 35% collection rate is needed in order to give the stated returns. And currently it's at 80 to 85%. So that would have to be, you'd have to lose 50% of that to go below break even, which is not very likely, but it's a really good question because I think it shows how strong this is.
And what's even more interesting as well is if you go through and do the math on if the spread between the interest that they're paying us and the collections that they're getting, they can typically go through and invest in hundreds of more contracts on a monthly basis, which is close to like 90 or $80,000 a month of additional revenue. And one more month of payments, and they can make 100% of the one more month of new acquisitions with that interest rate spread. They're able to pretty much pay for our interest with that additional contracts they're able to buy with that spread. So it really adds that additional bandwidth for them to have that affordability, and our collateral, of course, continues to be strong as we go through and buy more, and let them buy more contracts with that spread. That was the whole idea between the interest only, was to say, great, we can keep increasing our collateral by doing this and increasing their cash flow and make the borrower stronger and stronger to be able to pay us back during this term.
Awesome. And then to clarify some other questions, actually, let me see if we have, I know some people they're saying they need to jump off. So let's see if there's anything else we need to run through, and then we'll go back to it's easier if you guys want to put it in the Q&A, and we'll get back to it. Okay. I think we hit on this already. Yeah. Good on this one.
Yep, the 80% collection ratio as well on that, right? And it'll be at 25% of value. And this
Yeah.
one, of course, this is just an outline of the payments. You get 5% a quarter each quarter for 3 years. They do have the right to pay off early if they want to. They could pay off in 2 years or so instead of three. We couldn't charge them a high interest rate and say you can't pay off early. They have a lot of demand right now, so I don't foresee that happening necessarily right away or anything like that. So.
Yeah, I see some people asking, might it continue over 3 years? And I think probably not, because they're going to be able to self-fund after a certain point in time, right?
Right, right. They're already there. They're getting to that point after this. That's why we're, limited to the next 20 million here, because at that point they're going to be able to self-fund at
Yeah.
that point. So.
Yeah, and someone's asking, is Matt's only avenue of funding SuGo Capital? No. He has four other new fund managers who are looking at it, and 8 who are currently participating in it. So that's why I say, if you want to participate, please put in your soft reserve in the portal, because then I can let Matt know how much to save for us. If I say nobody's interested, he's going to go to another fund manager. He has other people he can work with. But if I say, oh, look, I have all this interest, please save this amount for me, then he'll do that for me.
Right.
Okay. Summary. I think we got through this. I'm going to go to investor next steps, and then we'll go to Q&A. Okay, so next step is sugocapital.com/build will take you to the investor portal for the SuGo Build Your Own Portfolio Fund. And once you're in there, you'll see the opportunities. This is opportunity number 5. So you can put a reserve, a soft reserve, it's non-binding, for opportunity number 5. And then by the end of the day, the team should have everything in there. So this recording, this presentation, our due diligence checklist, our due diligence items, all that information will be in the portal for you by the end of today. And so then you can begin your deeper due diligence. And know that we close every Thursday. So not today, but starting next Thursday, everyone who wires their funds by Thursday, on Friday, will put your money to work, and your interest starts accruing at day 10. So say you wire next Thursday. I don't know, what's the date of next Thursday? It is, today's the 1st. Oh, that's easy. Next Thursday, the 8th. So then 10 days later, so on it'd be the next Friday, that's when your interest starts accruing. And then your first distribution will be the first full quarter after you invested. So if you start right now, we're mid-quarter. So end of Q2, you won't get a distribution, but end of Q3, you'll get your first distribution, but it'll be everything you accrued starting from day 10 after you invested. So it's not like it's going to be blank and then you start accruing October 30th. You get your first payout October 30th, and it's everything from the day you invested to October 30th minus those 10 days. So it'll be prorated. And I put ish there because, like Matt said, he likes to pay out at the last day of the quarter, but sometimes there's a week or two fluctuation. I saw some questions about when do K1s come out? Do you want to answer that? I don't have this on the slide.
Yes, so I'm the mindset that I want my K1s out usually by the 15th of February. I think we were at like the 28th this time. So I don't like waiting in this. It's actually a lot easier than a real estate fund because it's debt. It's very straightforward and simple.
Yeah.
It's just a lot of K1s, and I try to get them out as fast as possible, usually way before the deadline occurs. So
Awesome. And then Matt and I, like I said, next Tuesday at 1 p.m., we'll have a special Q&A session just for this investment. So we have every Tuesday at 1 p.m., we have an open investor Q&A session. Next Tuesday, Matt will be there with me. And so, once you log in and go review everything tonight and over the weekend, come on Tuesday, write down all your questions and bring them to us on Tuesday. And Matt will be there to answer anything that you came up with that we didn't cover today or you didn't know to ask today. And Kath, if you can put a link in the chat to the Q&A session, it's just sugocapital.com/book a call, you guys, and then select May 6th as the date. And when we send out the recording tonight in an email, we'll send a link for that as well. But if you want to sign up now, that would be great. So with that, I'm going to stop sharing my screen and go to Q&A. Matt, do you have a hard stop at 1:30?
I do not.
Okay, great, because we've got 27 questions here.
No worries.
I think we answered some. If you see
There might be
something, just
some in the
grab it and
chat too.
go.
So.
Yeah, yeah. Questions about reinvesting. So yes, you guys can reinvest when you get distributions in the SuGo Capital Fund. You can reinvest them. So it won't be compounding on like a day by day basis. You would get your distribution and then you would reinvest it. How about this? I saw a lot of questions around risk, and we did talk about risk mitigation a few times, but what would you say are the top two risks of this investment, Matt?
So in my eyes, one of the biggest risks, of course, is, hey, what's the collectability of these accounts? Can we have a major drop in collectability of those accounts? I talked about the incentives there where, their invalidation services stop and things like that. And they're doing that major analysis up front for these people on their debt to income ratios and stuff like that. The other one is if resolution processing says, hey, I'm not going to pay you. And we have to go out and just like we would on a foreclosure of a property, we would go take over those receivables and bring them to a new servicing company or something like that. You might have some, some fall off during that process or something like that of the receivables if something negative happened like that. But this is exactly why I took, a long time and a lot of effort to go through and make sure that I really vetted the borrowers. I met with their COOs, their chief operating officers, their IT professionals. They live in Irvine, California. I'm in Orange County, California. I've been to their office like 15 times. That's why I'm analyzing their books consistently as far as all of their contracts and looking at the samplings of these contracts to make sure that they're all signed, they're all valid. We're seeing payments coming in. We're seeing the deposits coming into the bank accounts and stuff like that, and doing that tracing. So all that was important to me to be able to mitigate that risk. And over time, also the communication is super important. So me waiting, seeing what was going to happen with my funds that I put in first in debt fund one, slowly to see every day. If I text the owners of the company, they're texting me right back. They're calling me right back. They're, coming back to me consistently and providing me data and information that I need without a problem, or, giving me any flack or anything like that, no matter how detailed I want to get. So this is what I'm doing consistently to mitigate these types of risks, and what I did up front to kind of mitigate those risks that I'm talking about, so.
I appreciate that. And to tie in your question, Terry, how would I compare this risk to past investments? Where would it fall, high, medium, or low? Um,
It's a hard question.
Yeah, it's a hard question. I would say I would say medium, um, medium to low.
Yeah, from my perspective too, when you're
Mhm.
looking at this, when you're saying what's the risk level, you have what's the collateral? Is it a house? Is it a mobile home? Is it a receivables? Receivables would be, I'll say, the least form of collateral, except for the fact that that's why we're at 25% of the value, because you lend on a house at 65, 70% of the value. You lend at receivables at 25, and you're in a much better, safer position, especially when you have a historic 80% collection ratio. So, and you're in a pooled situation, so that would mitigate the risk as well. So it's hard for us to say high, medium, low. We can tell you here's the risks and here's why we think they're mitigated and why we decided to move forward ourselves, you know? So
Mhm.
I wouldn't be doing this if I thought I was going to lose my money or anybody else's money, you know? So
Hope that helped, Terry. Again, so K1s, your tax document will be a K1 and it'll be taxed as ordinary income, correct, Mr. CPA?
yes, correct.
Cool.
Passive ordinary
Um,
income.
all right. I think we answered a lot of these. I'm just kind of clicking if we already answered them. Um,
I think there's a good
other,
one about the evaluation of AR contracts. We have lists of these contracts that you can take a look at as well, and the UCC filings against those contracts. So we can provide that data so you can understand, what is in these giant pools.
I saw some, so your question, Leah, and then also Anthony, you asked about detailed financial statements for the past year's profit and loss, balance sheet, cash flow, all that kind of stuff. Anthony, if you send me a list of, if you go to the portal and you don't see what you want, send me an email. And Matt, do you want folks to sign an NDA in order to receive that information?
I'm not that concerned about it at the end
Okay,
of the day, but
okay,
anything that you guys need to provide you for due diligence, I'm fine with, across the board. And we have all the payment history in there for Debt Validation Fund
yeah.
2, Debt Validation Fund 1 as well, so that way you guys can see even the previous funds in the payment history and all that kind of stuff as well. So.
Yeah. So we have all that. Matt did submit it to us. So Anthony, send me an email with what you want, and we'll share it. We normally put the checklist in the portal saying this is I reviewed all this stuff on your behalf, everyone, because it's a boatload of information. But if you want something specific, just send an email to hello@sugocapital.com and we'll take care of you. Grab something else that you see that looks good, Matt, because I keep clicking them and they keep coming. So
No
just grab
worries.
them.
No, so I think one of them was, how do people get into the debt in the first place? And a lot of people think that this is just all credit card balances and things like that. A lot of it actually can be medical debt and that type of situation too. I don't know why you had mentioned, why would someone want to game the system? I mean, they're basically signing up for legal services to pay money to invalidate the debt. So I don't know that they'd make up a debt to pay money to get rid of, in that situation. But yeah, this is a lot of this has to do with medical and other issues like that. It's not all like just credit card and spending. There's a million reasons why people go into debt, even outside of spending. We see this all the time with just distress in people's lives, right? So it's not always just the spending, even though that's, a part of it in our consumerism society, I'll say, that needs to be solved.
Yeah, love it. I see some folks asking, can someone walk me through making an investment? Yes, if you email hello@sugocapital.com, we'll walk you through it. Also, if you go to sugocapital.com/onboarding, we have the onboarding guide. So it tells you exactly how to step one, step two, step three to invest. But let's see, Kath, if you could make a note, Jill Cooper, to send the onboarding guide, and then also Jill, once you get started, if you have questions, just reach out and we'll walk you through that. Oh, Terry asked, how long has Resolution been in business?
So they've been doing this resolution business since 2017 during that process, and that's when that occurred with that previous attorney, and so they've been doing it since then, basically. So they've done over like 70,000 accounts so far.
Okay.
And then someone had said that was asking you if they have to invest in all five of your investments or just this fund if they haven't invested yet. So
Yeah, just this one. So that's the beauty of it. You can pick and choose. You can be in all of them. You can be in one of them. You have to be in at least one. So as long as your total is $100,000 or more, you can allocate that between two investments if you want, or if you just want this one, you can put the full 100 in this one investment. But no, you don't have to be in all of them. Good question. Thank you for asking that.
there's another good question here is how does the fund end in 3 years with a 12 to 24 month collection timelines? Actually, they're normally 24 months. And what they're doing is with that spread and interest that they're collecting, they're buying more contracts to keep our collateral high consistently based on the balances of those loans consistently. So as they buy more contracts, our collateral stays high during that process. So, and that's why.
Cool. All right, someone's asking, how does everyone else get paid besides like each layer? How do they get paid? So the investors are first paid, the 20% is paid to investors, and then the profit that happens after that, then we split. So I want to make sure that you guys know that your 20% annualized is first. Okay. The Bella's asking, wow, are we investing before the debt has been invalidated or after?
You are investing in the receivables contracts for the services for that debt to be invalidated. But they know based on their percentages how much debt they're able to invalidate in that analysis up front, even before they get started. So they're able to do all their due diligence up front and make sure that that documentation is obtained and everything else so they know what they're going to be able to invalidate. So you're basically secured against those services receivables.
Cool, thank you. Let's see. What else? They just keep coming.
Uh,
Actually, since you're a CPA, why don't you take Teresa's question? I don't
yeah,
understand the term passive ordinary income. My understanding is income is either active, ordinary, or passive.
you can have active ordinary income, which you would get taxed your, payroll taxes and self-employment taxes on for active work, or you can have passive ordinary income if it's running a business, but you are not actively involved in that business, then it would still be considered passive, even though it's ordinary income. It's just classified as on line one of the K1 for ordinary income, but you're still passive because you're a limited partner. You don't materially participate in this business, which makes it passive for you.
Teresa, let us know if that um, answered your question. Want to make sure that's clear. All right. So Terry's asking, just to clarify, when payments to investors go out, does that show up as a credit at SuGo or is there money transferred to the investor's specified account? It'll go to the investor specified account within the fund. So you can leave it as a cash balance in the fund, Terry. Like when you receive, say you put in 100K, Matt makes his payout, it goes into the fund, and 5K goes to you. You can either leave it there as a cash balance, you can take it as a distribution, or you can reinvest it if at that time there's still room in the fund. I don't know if there's going to be room in this by the time there's the first distribution in October. Um, but if there is, then yes, you can reinvest. Hope that answers that. Okay, good. Good. Glad we got you, Teresa. All right. How about this one? I don't know if you want to tackle this one.
Tackle any questions, fine.
Political. How will the current administration push to get rid of consumer protection laws impact this investment?
So, So, and I've gotten this question before, so it's not too bad. So don't
Okay,
worry.
great,
So
great.
with regard to the consumer protection laws, yeah, they're pushing back on the consumer protection bureaus. However, to loosen regulations, however, they're not going to get rid of the actual laws to protect the consumer from unscrupulous creditors. I was saying this is one of the things that Trump and AOC agreed on, two completely polar opposites, and they agreed that they basically are saying, hey, these banks are making a lot of money here on this, and how do we, protect the consumer and limit interest rates and things like that in that degree. But they, are pushing back on the Consumer Protection Financial Bureau, but they're still leaving those laws in place. They're not changing the laws saying that the collection companies are allowed to, completely go after consumers in their unscrupulous, ways. So those laws still exist, even if the budget for some of these companies are cut. So. But I don't see it severely impacting this investment at all. We've actually, if there's major changes in distress in the market, you actually get more people that sign up for this service and more demand for the services than you would think, and your actual cost structure goes down in that situation where it costs less per lead because it's easier to find those leads.
There you go, guys. All right. Correct, Terry. First distribution would be at the end of the first full quarter that you're in the fund. So since we're mid-quarter right now, if you make an investment today, we're not at the beginning of a quarter, so it would start accruing this quarter, but then the first payout would be at the end of the first full quarter.
Yeah, so you get paid from if you
Wait,
invested
sorry,
if
did I do the quarters wrong?
No, you did it right. So if you invested today, for example, you'd start getting accrued interest on May 10th, for example, and then on from May 10th through 6/30 is an accrual, and then 7/1
Uh,
through the end of October is the end of the first quarter, and you get
uh,
paid out the accrual plus
I
the end
keep
of the
saying
quarter,
October.
that
Isn't it
quarter.
September? It's September,
September
right?
30th. Yeah, sorry,
Yeah.
not September. Yeah, there you go.
September. That's why I was
Confused me too.
confusing everyone. Sorry, sorry. At the end, yeah, it'd be September
The end of
30th.
September. Yeah, October
Yeah,
1st, so
October
yeah.
1st. Yeah, that was my typo, Terry. My typo. Good clarification. Yeah, it would be at the end of Q3.
Correct.
So that was me just doing doing stuff fast.
You're used to the distributions coming a month late, so it's fine. It's no problem. It's one month later. They got to do their accounting. If it's a multifamily or another, project
Yeah,
like that, it takes longer than just debt. Debt is a lot easier because it's very straightforward.
yeah. Yeah, thank you. Michael was chiming in. He's like,
A good
guys,
catch. Yeah.
guys. All right, Mateo. Yeah, the K1 would come from the SuGo fund. So Matt's the debt validation fund would provide a K1 to the SuGo
SuGo.
Capital Fund, and then we would provide a K1 to you. A question that nobody's asked, which I'm surprised, is would I make more money if I went straight to the debt validation fund? And the answer is no, it would be exactly the same.
Yep.
Yeah. Even though no one asked it, I'm surprised.
It's a good question.
Yeah. Okay. So I think we got everything. Is there anything else you want to say, Matt?
That's great. I mean, I really appreciate all the questions. This is great to have this many questions about it and everything. And if you guys think of anything else, we actually have a Q&A that goes over every question that any investors asked us that you guys can have. We have a custom GBT for this as well that for this investment. So any other information that we're missing or you that haven't thought of, feel free to reach out to us personally, or you can utilize our Q&A and see what other people have asked, as well. Whatever
Yeah,
we
I
can
have
do to help
the
you guys understand this deal as best we can, we're here for you. So
yeah, I have the FAQ and I'll put it in the SuGo portal for all of you investors. Definitely. Okay, so next steps, sugocapital.com/build. Kath made it a clickable link in the chat. Go ahead, register, click on opportunity number 5, put in your soft reserve, review all the material tonight. We'll send out the recording. You can go back and listen to anything that you wanted clarification on. And then sign up, sugocapital.com/book a call. Sign up for May 6th. And Matt will be there and will answer any questions you have after you review the FAQs and everything in detail. It might spark some more questions for you, Or if you go back and you talk to your CPA or your spouse, whoever you make your decisions with, if they have a question, bring them to the Q&A or bring their question to the Q&A, and we will be there for you guys. All right, Matt, thank you for spending the last 90 minutes with us, and thank you for putting together this opportunity. Like you said, it's really great for the people you're helping, and it's really great for investors because what else can you find out there right now with a 20% consistent cash flow? I don't know anything.
And
So
I really urge everybody, if you guys want the QR codes to go help those first responders out, feel free to
Mm,
reach out to us. We'll give you the QR codes for this. Anybody you know that is in credit card debt that has these types of problems, but most importantly, first responders that we really want to be focused on and trying to help them as best we can. So if you guys have those people that might need that help, reach out and we'll give you the QR code for those people so that they can go get that help they need, which is really cool to do. And I'm excited because resolution processing, Russ, is 100% focused on the client. They are specifically limiting growth to make sure that they have the client's best interest at heart, which is always great to hear. So I'm excited about this
yes.
opportunity.
And I'll put, Matt, if you would give me the QR codes, I'll put that in the document section. So every time people go into the portal, they'll just see that
Perfect.
as a reminder.
Awesome.
Okay. All right. Well, with that, thank you, Matt. Thank you, everyone who's still here. We'll send out this recording and we'll see you guys next week at the Q&A, and we'll see your soft reserves in the portal. All right. Bye, everyone. Bye, Matt.
Bye.
Thank you. Bye, Catherine, if you're still in here.